Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And I noticed in the chats that some of you have been watching the markets. We've noticed that the S&P 500 has run up about 19% since the end of March lows. Really strong market move, but I think that there are going to be a number of traders and investors out there might be thinking, could things be getting a little bit top heavy? If they are, how far down might stocks retrace? How far down might stocks pull back if a pullback is around the corner? Well, today we're going to be looking at a couple of charting tools that are sometimes employed by technical traders to gauge just exactly that. So should be a really interesting discussion. We have a lot to cover. We're going to be following up on previous trades, taking a look at market conditions, placing a new trade. Before we get to any of that, though, let me first of all say hello to everybody who's already chatting in out there in YouTube. Great to see a lot of familiar names. Great to see some that are new here. So hello there, Kevin, BZ Flower Bee, Ricebird, Mark, Farley, Michael, Olga, Rojo. Who else is out here? We have JDLMI, we have Jack, JV Texan, everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you are among those that are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, well, enjoy the recording. It's a great way to watch these webcasts, but you're certainly invited to join us in our live stream audience. This is a Friday webcast series, and we kick things off promptly at 1 Eastern time. Now, I also want to let my live stream audience members know that my very good friend Scott Thompson is going to be hanging out in the chats with us today. Scott and I have worked together for more than 2 decades now, so Scott brings a ton of experience to this discussion. Scott's going to be keeping an eye on the chat questions. If I can't get to those, he's there to pick up the slack for me. So thanks for having my back there, Scott. Scott and I would also like to issue an invitation to everybody listening to follow us on social media. You can find and follow us both on X. You can see Scott there at Scott Thompson CS. You can find and follow me on X at Cameron May CS. You can also find and follow me on LinkedIn. Just go to linkedin.com/n/Cameron May CS. But let's get into this discussion of how a chart technical analyst might gauge a potential reversal in stock prices. How far down might stocks or stock markets head? Now, before we get to that, there's of course important information to bear in mind. Risk is real, so keep these disclosures top of mind. This material is intended for general informational and educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so let's set the agenda for today. We just have one current example trade in place. I've been out of the office for the better part of the last 2 months. So we just have one position in place. We'll go take a quick peek at that. Then I wanted to talk about what's going on with the markets. The S&P has been rocketing up. It's pulled back a little bit today. If it were to continue that, how might we gauge how far down that might go? So we're going to be looking at a couple of tools that might be used by a technical trader to try to estimate those pullback distances, and we can apply those to stock markets. We're going to do that for the S&P 500. We're also going to do that for an example stock today, and then we're going to plan and place an example stock trade that's contingent upon a pullback. Should be a very interesting discussion. So let's go right to the Thinkorswim desktop paper money platform. Right now we have Newmont Mining, NEM, just 42 shares. We did a half size position last time. That's probably was a good decision because it hasn't been working quite as well. Let's go have a look at the charts. Here's what Newmont was telling us back when we placed this trade. So we took the position right here, April 24th. So right now it's March 15th. So you can see I haven't been here for a while. Took an entry on a Fibonacci retracement with a plan to take profits if we got above the 100% level. We're going to look for a reversal candle. What do I mean by a reversal candle? Well, this trade was actually built not using traditional candlesticks, but using what are called Heikin Ashi candlesticks. So let's switch our chart style from just a standard candlestick chart to a Heikin Ashi chart. Now, if you weren't here to see that discussion, I do have a recommendation for you. You can go back and find the archive. Make sure that you're subscribed to our Trader Talks channel if you're new. You can go right down below the video, just click on the subscribe button. Only takes a second, doesn't cost anything to do that. But our Trader Talks Schwab Coaching webcast YouTube channel is where you can join these live streams, but you can also find them as recordings under what are called the playlists. So I'm going to go to the playlists. Let's go to the playlist for advanced charting techniques. About halfway down, it's right there. If I click on view full playlist, we can look back to our discussion about trading short-term momentum swings with Heikin Ashi candlesticks. So I explained how the Heikin Ashi candlesticks are built, how they might traditionally be used for the planning and placing of a short-term stock trade. And so that's what we've done here. So we saw a bullish Heikin Ashi candle with the plan to exit if we get above the 100% and we see a reversal candle on the Heikin Ashis. We didn't get either of those accomplished. So just in case this started to falter, we do have a stop in place down here at 105. You can see really since this entry, Newmont Mining has pretty much been up and down. So we haven't hit a target. We haven't hit a planned profit-taking exit. We also haven't hit our stop. So the position is still there. We're going to let that one continue to work. And Scott just linked that for the live audience. Thanks for doing that, Scott. Definitely appreciate that. But let's switch this back to a traditional candle chart. And let's go see what's going on with the markets. So I'm going to switch over here to the S&P 500. And we're going to first of all look at things through that lens that we view the markets through each week. So each week we use a study set known as our Trend Value Momentum, otherwise known as the TVM strategy set. And it uses a combination of moving averages plus a couple of oscillators. So these are triangular moving averages, plus we have the RSI and the MACD. Again, if you don't understand if you're not familiar with this strategy set, what I would suggest you do again, go to the channel. Here's a quick shortcut. Rather than scrolling through the archives, you can also do a keyword search. So let's just type in TVM here. And you notice there's our discussion of swing trading the trend value momentum stock chart system. All right, but let's go back here. Let's see what this system has to tell us about what's going on with the markets. Well, unsurprisingly, the signal from our two moving averages is bullish. Now, interestingly, we just got a bullish crossover right here, where our 50 triangular moving average crossed back up and above the 100 triangular moving average. And as long as that 50 is above that 100, a trader might be looking to take full-size positions. Now, this is one customization that might be made to an approach. It's not the only way. Scaling down or scaling up position size based on a set of technical signals. But let's just say that for the management of this portfolio, we will be looking for, if we get the timing signals that we're looking for, full-size positions as long as the 50 is above the 100. There may be a question mark about that timing. Let's look at our other two indicators in this strategy set. So this is our trend indicator, and we'll just mark for the bulls, okay? Let's look at value. In the short term, even if we have an upward trending market, an upward trending stock, there are conceptually better times and worse times to enter that trend with long stock positions. So for example, traders buying at or near lows in the near term are conceptually at an advantage over those that are buying at or near highs. And that may be the concern right now. Even though we have a confirmation uptrend signal here, our value indicator has reached an overbought or a overvalued threshold. With our RSI, when we get up above 70, and especially if we start to cross back down below 70, that may be actually a bearish short-term signal. It's sort of like a pump the brakes, Cameron, hold on new positions. And if you look at where RSI is right now, 69.90 basically. That's just about as textbook a pump the brakes sort of a scenario for those that use RSI in this fashion. Yeah, that value may not be there in the short term through this particular technical lens. Now, finally, what's going on with momentum? Well, price has been going higher, Momentum has been pulling back though, not as much buying momentum. That would be the typical interpretation here. Hit a high on the MACD here, pulled down to a low, hit a new high, but definitely this seems like a lower high. So if we have lower high on an oscillator, higher high on price, what do we call that? That's known as a bearish divergence. Does that mean that the stock or the stock market's about to go into collapse mode? Not necessarily. It might just be a wait and see signal. So this is kind of 1 vote for the bulls, 2 votes for the bears. So I'm actually going to structure our trade not to be executed today, but to be executed at a future date contingent upon possible future price activity. All right. So we're going to be looking for stocks to be pulling down potentially. Well, if they do, how long might the trader need to wait? That's a great question. What might be a signal that the stocks have already sold off enough, time to get back in? Well, nothing's a guarantee, but there are a couple of technical tools among a number of others. I can't show them all, but there are a couple that might be used to try to answer that question. So one's a drawing tool and one's a technical study that can be found in our studies menu. So let's clean up our chart here a little bit. Let me right click. Let me clear off those drawings that I just made so we have a nice clean chart to work with next time. And I'm also going to remove these studies. So I could go up here, just remove them one at a time by clicking the X's, or what we can do is click on the studies menu and just remove all those studies. So that's what I'm going to do. Remove all those studies. Nice, clean chart. And I'm going to throw this question out to my audience because we got 165 people watching the live stream right now. And I know that a good number of you are relative veterans at using charts. And so when a trader sees a really strong move, an upward move or a downward move on a market index or on an individual stock, what's a drawing tool that's sometimes used to gauge how far back that index or that stock might pull back once that strong up or strong down move has kind of reached its turning point? What do you think? What's a drawing tool sometimes used? This isn't going to be a surprise, I think, to a lot of you. But let's come down here to our drawing tools. Yeah, Chris, fibs, right? Fibonacci's. So I'm going to be using Fibonacci retracements. That's a great term. We're looking for a retracement in price or retracement in index levels. So we're going to be using our Fibonacci retracements tool. Now, as I go to this, I realize that I'm kind of assuming that a lot of you know what I'm talking about when I talk about Fibonacci's. I'll still, talk about how it might be applied to the chart, but I'm not going to get into exactly how it's constructed because I've done that in the past. So if you're still learning about things like Fibonacci's, just remember again, you can come to the channel and just do a keyword search. So it's Fibo and then 1 N, 2 C's, Fibonacci, okay? You can just do a keyword search like this, and you can see here I did a breakdown of 5 different Fibonacci tools. Or if you just want to look at a more detailed introduction to the Fibonacci retracements tool, this is the one that I would suggest for you. Beginner's Guide to Using Fibonacci's to Trade Stocks. Paul says he has a preference for body to body. Actually, I'm not going to be doing that, Paul, because there can be different ways that traders apply Fibonacci's. But I will say there are definitely going to be some that disagree with the way that I draw this line. Okay. But what we're first going to do is select our Fibonacci retracements tool as our active tool down here. And then we're going to find this strong move, and we're going to try to capture the length of that. And I'm going to go to the very top. Looks like we topped out. Let's be really precise here. Let me show you how to use precision on this chart. Now, this could be done using either Paul's preference for going to the body highs, or for others, they might go to the wick highs on a candlestick. But I'm going to look at the absolute high for yesterday's trading. Looks like that was up here, 75.17. As I pointed today at yesterday's candle, you can see 75.17.12 is as high as the S&P got before it started retracing. So that's where I'm going to start drawing my line. 75.17.12 is right there. And I'm going to go all the way down to these lows. If I point at this candle from March 30th, I can see that its low was 63.1691. So I'm actually going to keep an eye on this gray number over here to the far right. Do you see that right by my cursor? And I'm going to get that to 63.1691. Oop, right. The system knows what I'm looking for, basically. That's about as close as we're going to get. Close enough. I'm going to click there. All right, so what this is doing is using a formula built on the Fibonacci number sequence. It's creating potential lines of support and resistance. And in this case, what we're looking for is we've made this strong move up. So going from starting at 0 up to 100% completion. And edit, Paul, we could edit the properties here as well. But this 100% level just represents the full length of this move. And for some traders, there's an assumption of proportionality in retracements when stocks or indices start to pull back. Because we're all basically human beings. Yes, there's some black box trading out there, some automated trading that happens, but even that is based on decisions that were previously made by human beings. And as a group, there's an assumption in technical analysis that human beings probably act in a somewhat predictable fashion. Now, are we always predictable at all times? Of course not. But if a lot of people just made a lot of money in a very short period of time, this was about 19%. I know that a lot of you kept an eye on the 401k balances, and you see that just going up and up and up each day, and now we're worried how far back might that sag? Yep. Well, built into the Fibonacci sequence is sort of an assumption of human nature, and that is that there could be a proportionality to how much traders sell off as a group after having a really strong move to the upside. And a typical assumption is that when we have a really strong extended move, we might give back somewhere around a third to somewhere around a half of that move. Art said, your wife says you're very predictable. Mine would probably say the same thing. Yep. But in any case, on a Fibonacci retracement tool, the 1/3 line is typically associated, it's not exactly 1/3, otherwise it would be 66.7, but the 61.8 generally represents about that 1/3 range. Close enough for estimates. And then we have the 1/2 here. So when we have a strong move to the upside, quite commonly a trader will expect or anticipate, if the selling continues, there's not a guarantee that will, if they're looking to gauge, well, how long do I need to sit on this? How long might it take? How far down might stocks go before it's time to start looking for entries? And so a common area is to look for a retracement down between these two levels. Let's draw in a box right here. This is kind of interesting. Somewhere between 61.8 and the 50% range. Look what that intersects very neatly with. Let me draw in a line here, right at about 7,000. Something about those big round numbers is another thing that traders commonly pay attention to. When stocks or indices get to big round numbers, either going up or going down, it's not uncommon to see hesitation at those levels. They can act as price ceilings or price floors, resistance levels or support. And look where that goes, right through the center of this Fibonacci retracement. I don't think I would be the only one. I can never speak for other traders, but I don't think I'm the only one that's making this observation right now. And I think that it's quite likely that there are other traders out there who use Fibonacci's, and they might be expecting, if we get an extended pullback, it could be down here to these levels again. Now, is that exactly what happens? Time will tell. We'll see. If we look at just today's candle, now it's kind of premature to do this, but I'm going to ask you to assign a label. Let me zoom in here. Let me zoom in. Now that you have a little bit closer view of today's candle, the trading day is not over. This candle shape is very likely to change in the remaining 2.5 hours of trading. But what name might you assign, or what label might you apply to today's candle on the S&P 500? kind of looks like a hammer. I don't think its placement is terrific from a traditional perspective because we typically look for hammers after a relatively extended downward move. And here we didn't really get one. It's a 1-day pullback, but still, let's just call it a hammer. So could this turn out to be a whole lot of nothing? The stock market just continues that relentless momentum that it's just had for the last month and a half. Certainly could. But I'm going to be planning a trade. Let's take sort of, I don't know if we call it erring on the side of caution, but at least looking at this through the lens of a trader who's just looking for the market to take a breath finally. This is one way that we might gauge how deeply that breath might be held before we continue. Now, that's one way to look at things. That's a drawing tool that might be used. There's also a technical study that we've acquainted ourselves with. It's actually a combination of technical studies, and it's known as the linear regression lines. Now, sorry, I'm going to do this one more time, but if we go back to the channel, if you didn't see our discussion recently of linear regression, let me go to the channel. Let's go to the playlists. And in our advanced charting techniques, we talked about using a combination of 3 linear regression lines. So I'm going to go to this playlist for the advanced charting techniques and scroll down just a bit. It's already on the screen, but I'll bring it up a little bit better into view. Building a custom linear regression system for short-term trades. So we're going to be using a sort of a combination of things here. Amy says, shouldn't the low be at 63.1691? I got it as close as I could, Amy. We're talking about a few pennies. I was satisfied with that. Because one thing about technical analysis is that when we start to assign extreme levels of precision to it, we might start to be, that might be setting us for even greater exposure to disappointment, because technical analysis is already trying to estimate in the future something that hasn't happened yet. And if we try to do that with extreme levels of precision, we might be overstating our skill set. So I don't want to give that impression. All right. I'm okay with leaving a little bit of gray area there, being off by a few pennies. Anyway, but it's a good observation. Yes, I tried to put it at 63.1691, just didn't quite get it there. All right, but check out that archive if you want to learn more about linear regression lines. But I'm going to go back here to the S&P 500. Let's zoom back out. Well, we already did. I got a little bit ahead of myself. And I'm going to come up here to our study sets, and let's load the study set that we built for a recent NVIDIA trade. So let's open up our linear regression ×3 study. So what this is, if you weren't here for this discussion, it starts with just a linear regression line. That's this middle one, just moving left to right. And what this does, if you're not familiar with linear regressions, it's just basically drawing a line basically as closely as possible through the middle of all of the trading of the S&P 500. Well, the S&P doesn't trade, it's a reflection of trading. But in any case, drawing a line through the middle of all the candlesticks for the S&P 500 for the selected chart time frame. So we're looking at a 1-year chart that's drawn a line through the middle of that 1-year chart. Now, above and below that, we're seeing the 100 linear regression and the 50 linear regression. Those were all added right up here. You can just type in linear. There we are. We started with the linear regression trend line, then added the channel 50 and the channel 100. Now, these are commonly used, again, to identify potential price ceilings, but also potential price floors. And what I found interesting is we apply this to the S&P 500. Oh, by the way, if you want to know where the 100 comes from, it basically draws a line at the, it draws a parallel line to the linear regression trend line. So they're parallel to this center line, but it's drawn out at the distance of at the furthest close for the time frame of the chart. So you'll notice right there on March 30th, that was the most distant close we had from this center line all year. That's it. So it draws one down there, and then it draws another one an equal distance above. And then this is just 50% between the center trend line and the 100% line, basically. All right. Now that's commonly used by traders to gauge potential areas of price floors and price ceilings, support and resistance. And I thought it was interesting in applying the linear regression line with this rather severe recovery that we've had. Look at where that's positioned the S&P 500. We haven't gotten as far away from sort of the let's say the normal area, normal being defined as the trend line, as we got back there in March. As a matter of fact, we're about half as far away from sort of the 12-month average as those March lows. So as extreme as this feels, it's not as extreme as those March lows, at least through this particular technical lens. And this may be a new price ceiling. Time will tell, but we're bumping our heads here. And for those that use linear regression lines, how might they gauge if we get a pullback? Where might that pullback stop and find a new support level? Well, for each of these lines, when approaching one from below, if it becomes a ceiling, we look to the one just below it as a potential support. Ted Barron says, near the highest upper deviation of the year. That's true, Ted. It really was. It was the highest upper deviation. That's a correct statement. So right here was the highest upper deviation that we've seen for this year, at least as these are currently defined. These are actually, they're redrawn as soon as we get a more extreme departure from the trend line. It just repositions all of these linear regression lines. But look at this, as we're coming up to this Fibonacci, it's very common when somebody's drawing a Fibonacci line to try to guess, well, have we gone far enough up? Should I even be drawing a Fibonacci yet? Well, this adds a little bit of additional technical evidence that, yeah, we might very well be at a turning point. Still a story to be told, not a guarantee that we're going down, but we're potentially bumping our head against this 50 linear regression. So where might we head from here? Well, a common range is to look for a return to the next lowest linear regression. That looks like that's right there, maybe between the 78 and 61.8. So that's kind of splitting the difference. Here's what I think we're going to do today. We're going to be looking for a retracement on an individual stock that's not waiting for an entire 50% retracement. But even if we can get down to that 61.8, that would be for the S&P just a little bit below this linear regression line. But I wanted to introduce a technical tool that's already built into the platform that could just be applied quickly, like the linear regression lines, or we have our Fibonacci lines, which can be used at the trader's discretion, applied wherever they see the big moves happening. They can just apply that according to their discretion. But I'm going to go to an individual stock now. All right, let's look for something. All I did, I just went to the S&P 500. I looked at the biggest stocks, started working my way down through, and I only got a few. Let's see, let's open up our S&P 500. I've organized these according to market capitalization. I literally went down through these. MU was interesting. Lots of these stocks. I didn't want to pick on NVIDIA again because we just traded NVIDIA recently, so I don't want to be redundant. But what's going on with Micron? Micron has really blasted off. Notice here, hovering right against this linear regression line, got up and through it. That seems to have acted as a new support, and then we took off. Ran up to the upside, and look where we've apparently found resistance. This is the strongest upside departure, Ted. Yep, this is the strongest upside departure for Micron by a long shot all year. So for some traders, they might be looking for, boy, is this thing exhausted? Is it time for this to pull back? It may very well be. Not a guarantee, but let's say that this is our trade setup. Now, for a linear regression trader, they might just look at this and say, well, if we're bumping against that 100, maybe we're going to pull back down to the 50. Looks like that's around 661. Well, let's also recruit our Fibonacci line. Let's come back down here. Let's switch this to our retracement tool. And I'm going to go right up to the top again. I'm going to be consistent here. Let's go to the very top of the highest candle, click up there, and I'm going to pull this down to where that move seemed to originate. That looks like that's right there, right as we were bouncing off that retracement line. I'm just going to pop it in right there. And if I zoom in, let me zoom in a bit. Might be able to see this a little bit better. I want you to be able to see the labels on our Fibonacci. This looks like this is our 50% line. Boy, that looks like that may be a pretty good support level where we get a convergence of the 50 linear regression line. And also that's right at that 50% line for this Fibonacci. So for those traders who see a ton of, I don't know, pressure building into the stock on this really strong upward move, maybe they might think that enough of that pressure has been released if we can just get down close to this. Maybe if it's even enough to get below our 61.8 or basically that 1/3 retracement. So I think what we're going to do, let's make a plan to buy the stock if we can get below this. Shall we just say 693? So somebody says, can you go from bottom to top when drawing? Oh, that's a good question. Good question. And we have the time, so I'm going to address that right now because you'll notice I always draw for bullish moves. I draw my Fibonacci's from top to bottom. Here's why. You can't quite see it on this chart, but if I right click and I drag, not right click, if I just click and drag on this right column, I can kind of compress my chart and I can have some extra space up above. What you'll see here is we're getting an extension line, which is sometimes used by Fibonacci traders for gauging more distant targets. Basically, that's just looking for a repeat of this move after a 1/3 retracement. So coming down to 61.8 and then going up 100% to the 161.8 level. Now, if I draw, by the way, if you do any messing around over here, the way to reset that, you can just double click on your chart, or you can come up here and just change that to auto. It kind of zooms back in. All right, let me zoom back out. I'm going to use a different move. So here's a move to the downside. So a Fibonacci trader looking for a continuation of moves to the downside would typically go to the bottom of that down move, click, and then make their second click at the top. Do you see what that's doing? It's making the extensions to the downside for lower targets. So direction is important. You click at so here's another big up move. Let's click at the top of that up move and go to its bottom, and you'll notice that's making extensions here, extensions here. Ooh, look at this. It looks like we almost got to the 261.8 on this move. Maybe another piece of technical evidence there. Anyway, that's it. So let me just remove this drawing, and I'll remove this one as well. But our plan here for entry is going to be if we can get back down below that 61.8, get closer to our linear regression and our 50% fib line. So let's call it down below 693.25. I'm just going to enter if we get down to 693. Well, that's to get in. Where might a technical trader get back out? Well, to take profits, it might be if we can get back in on the retracement, we get a bounce if we can just get back up to the 100% line, or even just back up to the linear regression. That looks like that's around 818. So here, if it helps to visualize, let's draw in a couple of lines here. So what we're looking for is for the stock to go down from where it is, down below 693. That's where we're looking to get in. If we get a bounce, get out if we get back up to 818-ish. Doesn't sound like a lot. I mean, it doesn't look like a lot on a chart, but on Micron, this thing just moves. Going from 690-ish up to 818-ish, if you can do the math on that, it's over 125 bucks. Pardon me. All right, but it might not work. If it pulls down and we buy and that continues to sell, that's not what we wanted. So if we're breaking below fibs, if we're breaking below linear regression lines, maybe we just say, looks like this one isn't going to work the way we intended. How about if we have a plan to get out if we get below the next fib line? That would be below 654.50. Let's just be pretty precise. Let's put in a stop at 654. Pardon me, my voice is all of a sudden struggling. Anyway, that's going to be our plan. We'll have a stop down here. Plan to enter somewhere here. Plan to exit either here or here. So how do we put that plan into action? Let's go to our trade tab. And let's assume that we invest $10,000 in this trade. Okay, 10,000 bucks. It's kind of a pricier stock. Let's get 10,000 bucks. Divide this by $743 per share. It would actually be less than that, wouldn't it? Let's be real. 10,000 divided by 693 would be 14 shares. Okay. NVO says 818-ish. Stock isn't guaranteed to get to actually 818. Well, it's not guaranteed to get anywhere, right? Yeah, but for that reason, some traders might actually round down a little bit. I actually did say 818-ish because that's kind of in the same neighborhood as that Fibonacci retracement and the 100 linear regression line. But let's buy 14 shares. And we're going to put in an order to buy if it drops to 693. And then 2 contingent sell orders. One to get us out if we go back up to 818. The other to get us out if we drop down to 654. If I'm remembering all these numbers correctly. I think I am. Anyway, here's how we might do that. I'm going to right click. And I'm going to put in a custom buy order with an OCO bracket. So let's put in an order to buy 14 shares. And actually, let's link all these together. So let's click on the broken chain link and repair it. That literally just links the quantities together. So when I change one, the other 2 change automatically. And let's make this our limit purchase price. It's going to be $6.93. I'm going to make that one good till canceled. It's probably not going to get there today if it gets there at all. But if it does, then we're going to have 2 contingent sell orders. One is going to be our limit sell order to take our profits, which is going to be our 818. And the other, let's make that good till canceled. The other is going to be our stop at 654. Let's make that good till canceled. Now, finally, I'm about to head out for 4 weeks. I'm going to go out for a month to Scotland. All right. So I'm not going to be sitting around to keep an eye on this to see if this fills or not. And for some traders, if they put the order in, they think something's supposed to happen in the next few days, the next couple of weeks, and it doesn't happen, it's easy to forget about these good till cancel open orders. And so if we want to, we can actually add a condition over here to cancel this at a future date. Should we give it a couple of weeks? Let's say it either fills in the next couple of weeks or just cancel it. So let's save that. And we're going to click confirm and send. We're buying 14 shares of Micron at 693. That's the limit. That's the most we're willing to spend. That's a good till canceled order. It will cancel if it doesn't fill on the 29th. Now, if it fills, we have an order in to sell at 818, trying to make 125 bucks. We have a second order to sell and take a loss that could expose us to $39 or more. If we get a really strong move to the downside, it could blast right through that stop. We're not guaranteed to sell at a specific stock price with a stop order. Now, there's no commission on this trade, but there can be on some types of trades, but I'm going to send that off. There we go. And that is now working. So we're waiting. We're trying to shave off about 50 bucks on our entry price. It just, boy, you know, if you're looking at this chart, it doesn't look like much of a pullback to go from where it is right now. If we clean up our drawings, let's clear our drawing set so you can see this a little more cleanly. We're literally just asking the stock to go from here to here. It just doesn't look like much. That's a $50 drop we're asking of the stock. We'll see if we can get it. But guys, we've accomplished what I set out to do today. I wanted to talk about a couple of tools that traders might use if they're trying to gauge when a stock or an index has really been running up sharply, if it starts to pull back, how far down might it retrace? And then how can we tie a trade to that action? So we've done exactly that. Hope that was helpful for you. It is time for me to head off to Scotland. Thank you, Fred. Fred says, you love Scotland, so do I. Yep, I actually own a little place over there. We go and visit it every year. So that's what we're going to do. So everybody, thanks for giving me your time today. I will see you in a month. We have everybody scheduled to cover for me while I'm out. So our other coaches will do a great job for you. I want to let you go enjoy your weekend. We have a few more webcasts coming up, so go enjoy those first. But also remember, you have a ton of resources here to you available free of charge from Schwab Education, starting with the channel. So if you haven't subscribed to our Trader Talks channel, do that. Go down and click on the subscribe button. Doesn't cost anything. It only takes you a second. That's where you can join the live streams. You can also find our playlists. Scott and I would also encourage you to follow your favorite presenters on social media. So you can find and follow us both on X. You can find Scott there at Scott Thompson CS. You can find me on X. Here's my handle at Cameron May CS. And if you reply to one of my posts here on X, I just try to reply right back to you. It allows for interaction when the camera's not on. But you can also find and follow me on LinkedIn. Just go to linkedin.com/in/Cameron May CS. Just like that. That'll take you to my profile. You give me a follow here, and I post here as well. And this is where we can also interact. So love to see you on social media. Scott, thanks for helping out. That's definitely appreciated. Thanks to everyone who's already clicked the thumbs up button. We've had 175-ish people watching the live stream. 58 have already clicked the thumbs up. That's really appreciated. It gives me a nice pat on the back. That's great. But it also gives my video a little boost in the YouTube algorithm. Every time somebody clicks like, it sends the signal to YouTube that, hey, people are enjoying this. Show it to more people. So thanks for doing that. I will see you in a month. Now, at that time, I'll look for you in future webcasts. Between now and then, I'm very likely to stay active on social media. So make sure that you're finding and following me there. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.